Hi guys, I'm back again. I'm Jeffrey. Wherever you are, a good day to you. Now, if you can see the screen that I'm sharing, what's been happening to the stock market? Okay, one of the very important things that you ought to know is that, of course, recently Alibaba dropped. Okay, and it's dropped from 318 all the way to 215 at one stage. Okay, this is the US dollar version, right? So 215 divided by 313 is 0.69 minus 1. That's about 31% drop. Okay. Now, 31% drop is quite large. Now, what do you do if you're owning Alibaba? And what do you do if you are not owning Alibaba, but you would like to own it? Okay. You need to ask yourself, is this company's business model something you're comfortable with? And I can tell you that most of the internet platform, okay, that you sell stuff, like for example, Lazada in Singapore, you have Carousel. I think anybody can put up there, whether you got Birkin handbags or whatever, you just put it up there for sale. It can be a small merchant and you can put it up there. It's very different business model from Amazon. Who just buy it from you, okay? So Amazon is huge. So when they buy from you got nothing to say, right? I mean, they got bargaining power, and then you got to squeeze your margins down to nothing. So here's what I like about Alibaba: they groom small merchants. Okay, if you don't have money to put on advertising fees, you can pay for advertising fees, and you don't want to be subject to Amazon. Put it on Alibaba. They got Tmall. They have the other one is called you can hear the mic. Something is wrong with the mic. So the thing is, all right, if the business model is still good, I know they have end financials and all that, and it's a big issue, right? But even if end is no longer going to be listed, and the company is wiped out, it accounts for 10% of revenue, so it's not going to change much. So what about the latest anti-monopolistic rules? Okay, so Alibaba does not want merchants that advertise on them to advertise in JD.com, competitors like JD and as well as Pintoto. So that's fine. So if the government has said, you look, you can't practice these things and you need to continue, you need to be fair. So you allow the merchants to advertise in all three. I think Alibaba is by far the largest. I bought things from Baba as well, right? Taobao. I got the stuff AliExpress as well, and I got the goods quite fast, quite accurately, and it's cheap. So if you think that even if you allow the merchants to advertise in all the platforms, including Alibaba, what would the earnings drop? Maybe another 10, maybe another 20%. So how does that translate into fair value? Let's move on to here, Morningstar. So this is after the news has been announced. The fair value is still at 296 US dollars. How do you convert that to Hong Kong dollars? 296 times 8 divided by 7, sorry, 296 divided by 8 times 7.75, you get a fair value of about $287. $287 is still way above what is the last price, right? And the last price is, in this case, is 236 in US, is listed in US against a fair value of 296. So 236 divided by 296, that's a good 20% upside in the US ADR. So I would say that it is worth a buy. And if you look at here, right, in the chart, there's a collapse here. It's likely to close the gap. And I know the trend has fallen, but look at the 150-day moving average, still rising. So the trend is still up. I will personally be buying here. In fact, I bought here right at the bottom, 221 US, but I bought in Hong Kong as well, 210 somewhat. So you can subscribe to Morningstar. I mean, it's only about $200 Sing dollars a year, and then you can read the news, the latest analysis. And of course, it's very objective because they are not sell-side brokers. They are paid subscription. So again, guys and girls, I mean, free stuff from sell-side brokers are not good. I mean, not that it's not good, but free stuff, there's always a way that they're going to earn money from, right? Whether it's from the companies that give them investment banking business or whatsoever. So either way, objectivity is very important. So if you are beholden to the companies that analyze, you can't put a sell call. But in Alibaba, in Morningstar, I think you pay for it. They earn their money from your subscription. I think it's more objective. There's no investment banking business to go. So not that I'm saying that it is bad, all sell-side brokers are bad, but I think you pay money for this type of subscription. You can do Motley Fools or Seeking Alpha. It's the same, like Morningstar. They come out with fair value, and they are all using discounted cash flow. So this is one way to look at it. If you're doing that, don't use PE ratio for growth companies because it looks like 50 times PE, and then, hey, I mean, if you're growing at 40, 50% a year, in about 5 years' time, it's probably going to be 20 times. So therefore, the company is definitely worth a lot. So use discounted cash flow, do the proper assumptions, and you get the price. So that's all. Good luck, everybody. Hope that you have a profitable trading ahead. I think, yeah, you need to reduce your risk because the markets have run ahead of itself. I think next year will be volatile, but most of the central banks are printing money still. So the world hasn't recovered from COVID. In fact, there's a new strain in UK. So I think that there'll be still a lot of government help going on there. Okay, so signing out. Take care. Adios. Till the next time. Cheers.